right, let's dive right in. This is the 2025 second quarter earnings release from Microsoft.
Yeah.
And at first glance,
Yeah.
the headline numbers are pretty impressive.
Mm-hmm.
$69.6 billion in revenue.
Wow.
A solid 12% jump.
Okay.
And operating income soaring to $31.7 billion, a 17% increase.
Nice.
But the real story, I think, lies beneath the surface.
Yeah.
And trust me, it's a fascinating one.
What's particularly striking is that Microsoft Cloud just crossed a major threshold, pulling in over $40 billion for the first time ever.
Wow.
This isn't just about big numbers.
Right.
It points to Microsoft's strategic positioning as the leading cloud provider, especially for the kind of heavy-duty computing needed for AI.
It's like we're witnessing a replay of the shift from client-server to cloud computing.
Yeah.
But this time, AI is the driving force.
Right.
Do you think history is repeating itself?
There are definitely parallels.
Okay.
Businesses aren't just experimenting with AI anymore. They're going all in, integrating it into their operations to boost efficiency and gain a competitive edge.
Right.
And that brings us to another remarkable figure.
Okay.
Microsoft's AI business is exploding.
Yeah.
Growing at a staggering 175% year over year.
That's not just growth. That's a full-blown AI explosion.
Yeah.
It's mind-boggling to think that even with supply constraints
Yeah.
for their Azure AI services, they still surpass revenue expectations.
Yeah.
Clearly, the demand for AI solutions is through the roof.
Absolutely. And Microsoft is laser-focused on scaling up its infrastructure to ride this AI wave.
Yeah.
They've more than doubled their data center capacity in the last 3 years alone.
Wow.
And last year was their biggest capacity expansion ever.
It's like they anticipated this surge in demand and built the foundation to support it.
Yeah.
But it's not just about throwing more hardware at the problem.
Right. They're taking a multifaceted approach.
Okay.
Using software to optimize AI and make it more accessible. Think of it like this. Every new generation of hardware makes AI twice as powerful for the same cost.
Yeah.
And Microsoft's software optimizations magnify that by another tenfold.
Wow.
That's an incredible leap forward.
So what does all this mean for someone like me or for our listener? Is this just tech industry jargon?
Yeah.
Or does it actually affect our lives?
It means that AI is becoming more powerful and affordable,
Okay.
opening up a whole new world of possibilities. We're talking about a future where AI seamlessly integrates into our work and daily lives.
Right.
A great example is Microsoft 365 Copilot,
Okay.
which is already transforming how we work.
Yeah.
It's seen an incredible adoption rate. Users who started with Copilot 18 months ago have increased their usage by 10 times.
10 times. Wow. That's some serious commitment. But it's not just about using Copilot. It's about tailoring it to specific needs, right? I read that over 400,000 custom agents have been created in just the past 3 months using Copilot Studio.
Wow.
It seems like users are taking control and personalizing AI to fit their workflows.
Exactly. And that's a key part of Copilot's success. It's user-friendly, boosts productivity,
Yeah.
and integrates seamlessly with Microsoft's existing suite of tools.
Okay.
It's like having a personalized AI assistant that understands your work style and adapts to your needs.
It all sounds incredibly promising,
Yeah.
but I'm also curious about the challenges Microsoft is facing. I know they've hit some snags in non-AI Azure sales,
Okay.
especially when it comes to partners and indirect channels.
Yeah.
Can you shed some light on that?
Sure. While Microsoft is riding high on the AI wave, they're also adapting to shifts in the broader cloud market.
Okay.
Their approach to non-AI Azure sales, particularly through partners,
Right.
is undergoing some adjustments.
So even a tech giant like Microsoft has to stay agile and tweak its strategies,
Yeah,
especially in a fast-paced field like cloud computing.
absolutely. And then there's the whole OpenAI saga,
Yeah.
Microsoft's investment in them. Right.
The creators of ChatGPT has been making headlines, and there have been some recent changes in their partnership.
I've been following that story closely.
Okay.
It seems like Microsoft's role in funding OpenAI's massive training infrastructure has shifted. But they're still deeply committed to the partnership.
That's the key takeaway. OpenAI continues to rely heavily on Azure for its AI needs.
Okay.
And both companies clearly see the value in this collaboration.
So it's a win-win situation.
Yeah.
But beyond the partnership itself, what does Microsoft's strategy with OpenAI tell us about their broader approach to AI?
It tells us that they're not betting on any single horse in the race. Microsoft is focused on building a flexible, fungible infrastructure
Okay.
that can support a diverse range of AI models,
Right.
both proprietary and open source.
Fungible infrastructure sounds intriguing.
Yeah,
But can you explain it in a way that makes sense for someone who isn't a tech expert?
think of it like a universal power grid.
It doesn't matter what kind of power plant is generating the electricity: coal, solar, wind. The grid can handle it all and deliver it where it's needed.
Yeah.
Similarly, Microsoft is creating a cloud infrastructure that can support various AI models,
Okay.
regardless of their underlying technology.
Mm-hmm.
This ensures they're well-positioned for whatever the future of AI holds.
That's a great analogy.
Yeah.
It highlights Microsoft's long-term vision and their commitment to being at the forefront of the AI revolution. But before we get lost in the complexities of AI infrastructure,
Right.
let's take a closer look at the financial details behind Microsoft's impressive performance this quarter.
Yuri, let's dive into the numbers.
Okay.
Starting with revenue, Microsoft brought in a hefty $69.6 billion.
Wow.
A solid 12% increase compared to the same period last year.
And their operating income,
Yeah.
a cool $31.7 billion, is up a significant 17%.
Nice.
Those are some impressive figures.
What's particularly striking is the strength of their commercial bookings. They surged by a whopping 75% in constant currency, reaching $298 billion in remaining performance obligations.
Okay.
This clearly indicates that businesses are placing their bets on Microsoft's cloud and AI offerings for the long haul.
Yeah.
It's like a massive vote of confidence.
It certainly seems like Microsoft is in a strong position. But to get a more detailed picture,
Yeah.
let's break down their revenue by segment,
Okay.
starting with productivity and business processes.
All right.
This segment pulled in $29.4 billion in revenue.
And grew by a solid 13% in constant currency,
Okay.
even with some headwinds from foreign exchange. A significant driver here was the continued strong performance of Microsoft 365.
Microsoft 365 commercial cloud revenue in particular was a standout, growing by 15% in constant currency. Businesses are clearly embracing the power of cloud-based productivity tools.
Yeah.
And it seems like Copilot is playing a significant role in that adoption.
Absolutely. We're seeing strong growth in both new and existing customers using Copilot. Right.
Which suggests it's becoming an integral part of their workflows.
It's also worth noting the strong performance of Microsoft 365 commercial products, which saw a significant increase in transactional purchasing thanks to the launch of Office 2024. It seems like the demand for both cloud-based and on-premises solutions remains strong.
Yes, it's interesting to see that both cloud and traditional software models are still relevant in today's market. Now let's shift our focus to the intelligent cloud segment,
Okay.
which brought in $25.5 billion,
Wow.
growing by a healthy 19%.
Azure continues to be the star of the show, with Azure and other cloud services revenue soaring by an impressive 31%.
However, it's important to note that
Okay.
while AI services within Azure performed exceptionally well,
Yeah.
exceeding expectations even with capacity constraints, there were some challenges in non-AI Azure sales,
Okay.
particularly those managed through partners and indirect channels.
Right, and it seems like they're addressing those challenges head on.
In the earnings call, they mentioned making adjustments to their sales strategies
Okay.
and focusing on finding the right balance between driving AI adoption and supporting existing cloud workloads.
It's a delicate balancing act, but their proactive approach and commitment to customer satisfaction bode well for the future.
Okay.
Now let's turn our attention to the more personal computing segment,
Right.
which recorded $14.7 billion in revenue, remaining relatively unchanged from the previous year.
While that might seem like a less exciting result
Yeah.
compared to the other segments, there are still some interesting takeaways here.
Okay.
For example,
Yeah.
Windows OEM and devices revenue actually increased by 4%, driven by commercial inventory, builds ahead of the Windows 10 end of support.
That's a good point. It highlights the ongoing demand for Windows devices, even in a market increasingly focused on cloud-based solutions.
Right.
Search and news advertising revenue,
Okay.
excluding traffic acquisition costs, also saw a robust increase, growing by 20% in constant currency,
Wow.
fueled by continued share gains in Edge and Bing, as well as improvements in ad rates.
So even though overall revenue for this segment remained relatively flat, there are pockets of growth that demonstrate Microsoft's ability to adapt and innovate across its diverse portfolio of products and services.
Precisely. And it's important to remember that Microsoft is not just a cloud company or an AI company.
Right.
It's a technology giant that continues to evolve and find new ways to meet the ever-changing needs of its customers.
Okay, we've covered a lot of ground in this first part of our deep dive into Microsoft's earnings.
Yeah.
We've seen impressive growth in their cloud and AI businesses, but also some challenges in non-AI Azure sales.
Right.
We've also gained insights into their capital expenditures and how they're scaling up to meet the demands of AI.
Yeah.
And we've even touched on some exciting developments in areas like Microsoft 365 Copilot and OpenAI. But there's much more to explore. In the next part of our deep dive, we'll delve deeper into Microsoft's financial performance, examining their margins, profitability, and cash flow to get a more complete picture of their overall health and strategic direction.
Okay.
So stay tuned.
Sounds good. Picking up where we left off, let's shift our attention to Microsoft's profitability.
Okay, we talked about revenue, but what about the bottom line? How are they managing expenses and maximizing their profits?
That's where things get really interesting. Their gross margin dollars increased by a healthy 13%, and even more impressively by 12% in constant currency.
So they're making more money on each dollar of revenue. That's a good sign, right?
Absolutely. But it's not just about top-line growth. It's about efficiency. Microsoft managed to keep their operating expenses to a modest 5% increase, which is significantly lower than anticipated.
So they're keeping costs under control even while investing heavily in AI. That's impressive. What impact did that have on their operating margin?
It allowed their operating margin to expand by a significant 2 percentage points, reaching a remarkable 45%. This demonstrates their ability to grow aggressively while maintaining a laser focus on profitability.
It sounds like they've struck a good balance between investing for the future and delivering strong financial results. Now let's talk about cash flow. How's that looking?
Their cash flow from operations was very strong, increasing by 18% to $22.3 billion. This was fueled by robust cloud billings and collections, which indicates a healthy pipeline of future revenue.
That's great news. But I noticed that their free cash flow actually declined by 29% to $6.5 billion. That seems a bit counterintuitive given their strong operating cash flow.
You're right to point that out, but there's a logical explanation. Remember those massive capital expenditures we discussed earlier? Microsoft is pouring resources into building out its AI and cloud infrastructure. These investments require significant upfront cash, which impacts free cash flow in the short term.
So it's a bit like planting seeds for future harvests. They're sacrificing some immediate cash flow to build a foundation for long-term growth.
Exactly. Their capital allocation strategy reflects a long-term vision and a willingness to make bold bets to secure their dominance in these key markets. They're playing the long game.
That makes sense. Now let's zoom in on some of the individual segments that contributed to Microsoft's success this quarter. We've already touched on the impressive growth of their cloud and AI offerings, but I'm curious to hear more about their performance in other areas.
Of course. Let's start with the productivity and business processes segment. As we mentioned earlier, this segment performed exceptionally well, driven by strong growth in Microsoft 365 for both commercial and consumer customers.
Microsoft 365 commercial cloud revenue in particular seems to be a standout performer. What factors are driving that growth?
It's a combination of factors, including better-than-expected performance in their E5 offering and, of course, the continued success of Microsoft 365 Copilot.
It seems like Copilot is really becoming a game changer. It's interesting to see how it's being adopted across different segments of their business.
It's a testament to Microsoft's ability to integrate AI seamlessly into existing products, creating compelling value for customers. Now let's move on to LinkedIn, which continues to be a valuable asset for Microsoft, connecting professionals worldwide and generating solid revenue growth.
They reported a 9% increase in revenue, which sounds pretty healthy. What's the story behind those numbers?
While LinkedIn saw continued growth across all its business lines, their talent solutions business, which focuses on recruitment and hiring, experienced slightly softer demand than anticipated.
Given the current economic climate and uncertainty in the job market, that's not entirely surprising.
True, but it's important to remember that LinkedIn remains the dominant platform for professional networking and continues to innovate, leveraging AI to connect recruiters and job seekers more effectively.
Now let's talk about Dynamics 365, Microsoft's suite of business applications. This one really caught my eye, with revenue surging by an impressive 19%. What's fueling that growth?
It's a combination of strong demand across all workloads and their continued success in winning customers from legacy providers. They're attracting new customers while also expanding their footprint within existing accounts.
It sounds like Dynamics 365 is becoming a formidable force in the enterprise software market.
It is. And their focus on AI-powered solutions like the DAX Copilot is clearly resonating with customers who are looking to streamline their operations and make data-driven decisions.
Okay, we've covered a lot of ground from gross margins and cash flow to the performance of key segments like productivity and business processes, LinkedIn and Dynamics 365. Overall, it seems like Microsoft's firing on all cylinders with strong financial results and clear evidence of their strategic execution.
Absolutely. They've demonstrated their ability to navigate a complex and dynamic market while continuing to invest in future growth. But as with any business, there are challenges and uncertainties on the horizon.
That's a good point. It's never all smooth sailing, especially in the tech industry where things change so rapidly. What are some of the key challenges that Microsoft faces as it moves forward?
Well, one of the biggest challenges is staying ahead of the curve in the rapidly evolving AI landscape. The competition is fierce, and new players are emerging all the time. Microsoft needs to continue to innovate and differentiate its offerings to maintain its leadership position.
That makes sense. Innovation is key in the tech world. What other challenges do you see?
Another challenge is managing the complexities of their growing cloud business. As they scale up their infrastructure and expand their customer base, they need to ensure they can maintain the same levels of reliability, security, and customer support.
So scalability and maintaining quality are crucial as they grow.
Exactly. And then there's the ongoing need to attract and retain top talent. The competition for skilled engineers and developers is intense, and Microsoft needs to ensure it can attract and retain the best minds in the industry to drive its future innovation.
That's a good point. Talent is a key ingredient for success in any tech company. But it's not just about technical skills. It's also about having the right leadership and culture to foster innovation and collaboration.
Absolutely. Microsoft has a strong track record in these areas, but they need to continue to evolve and adapt as the tech landscape changes.
Okay, we've discussed some of the challenges Microsoft faces, but it's important to remember that they also have significant strengths and opportunities.
You're right, they have a strong brand, a massive customer base, a deep understanding of the enterprise market, and a proven track record of innovation. They're well positioned to capitalize on the growth of cloud computing, AI, and other emerging technologies.
It sounds like they have a lot going for them. But before we wrap up this part of our deep dive, I'd like to touch on one more important aspect of Microsoft's performance: their commitment to sustainability.
That's an excellent point. Sustainability is becoming increasingly important for businesses across all industries, and Microsoft is taking a leadership role in this area.
They've set ambitious goals to reduce their environmental impact, and they're investing in initiatives to promote renewable energy, reduce waste, and create a more sustainable supply chain.
They're also using their technology to help other organizations become more sustainable. For example, they're providing cloud-based tools and solutions to help businesses track their emissions, optimize their energy consumption, and manage their environmental footprint.
It's great to see a company like Microsoft taking such a proactive approach to sustainability. It's not just about doing the right thing, it's also good business. Consumers and investors are increasingly rewarding companies that prioritize sustainability.
Absolutely. And it aligns with Microsoft's mission to empower every person and every organization on the planet to achieve more sustainability is an essential part of that mission.
Okay, we've covered a lot of ground in this second part of our deep dive into Microsoft's earnings. We've delved into their profitability, cash flow, and the performance of key segments, and we've also discussed some of the challenges and opportunities they face as they move forward.
In the next and final part, we'll wrap up our analysis by examining some of the broader implications of Microsoft's performance for the tech industry and the global economy. We'll also explore what this all means for you, the listener, and how you can leverage these insights to navigate this exciting and rapidly evolving world.
This is fascinating. I'm eager to hear your insights on the bigger picture. So join us for the final part of our deep dive, where we'll connect the dots and explore the implications of Microsoft's success for the future of technology. Okay, we've crunched the numbers, explored Microsoft's strategic moves, and even touched on their sustainability efforts. Now let's zoom out and look at the bigger picture. What are the broader implications of Microsoft's performance, not just for the tech industry, but for the world at large?
That's a great question. I think Microsoft's trajectory tells a compelling story about the forces shaping our technological landscape and ultimately our lives. Their success in cloud computing and their aggressive push into AI signal a major shift in how businesses operate and how we interact with technology.
We've already seen how AI is transforming industries from healthcare to finance, and Microsoft seems determined to be at the forefront of that transformation. But with great power comes great responsibility, right? What are some of the potential downsides or challenges associated with this rapid advancement of AI?
You're absolutely right to raise that point. The ethical considerations surrounding AI are becoming increasingly important. As AI systems become more sophisticated and autonomous, we need to ensure they are developed and deployed responsibly with safeguards in place to prevent unintended consequences.
So it's not just about the technology itself, but also about the ethical framework that guides its development and use. Are there any specific concerns you have about the potential misuse of AI or the concentration of power in the hands of a few tech giants?
Those are valid concerns. One potential risk is the use of AI for malicious purposes, such as the creation of deepfakes or the development of autonomous weapons systems. We need to establish international norms and regulations to mitigate these threats. There's also the issue of bias in AI algorithms, which can perpetuate existing societal inequalities if not addressed properly.
So it's crucial to ensure that AI is developed and used in a way that benefits all of humanity, not just a select few. It seems like we're entering a new era where technology is advancing faster than our ability to fully grasp its implications.
That's a perceptive observation. The pace of technological change can feel overwhelming at times, and it's essential for individuals and societies to adapt and evolve alongside these advancements.
We need to develop critical thinking skills to evaluate information, discern fact from fiction, and engage in constructive dialogue about the role of technology in our lives.
I completely agree. We need to be informed citizens, not passive consumers when it comes to technology.
This deep dive has certainly given me a lot to think about, not just in terms of Microsoft's business, but also the broader societal implications of the AI revolution. What key takeaway would you leave our listeners with?
I'd say this. The future is not something that happens to us. It's something we actively create through our choices and actions. The rise of AI presents both challenges and opportunities, and it's up to each of us to engage with these technologies thoughtfully and responsibly, shaping a future where AI benefits all of humanity.
That's a powerful and inspiring message. Thank you for joining us on this deep dive into Microsoft's earnings. It's been an insightful journey through the world of cloud computing AI and the forces shaping our technological future. We hope you enjoyed the ride, and we encourage you to continue exploring and learning about these transformative technologies.
It's been a pleasure sharing these insights with you and our listeners. Until next time, keep exploring and keep learning.
That's a wrap on this deep dive. We'll catch you next time for another insightful exploration of the forces shaping our world.